Welcome to Chit Chat Stocks. Before we get to this episode, we want to talk about our friends at Public. If you trade options, you've got to ask yourself, why wouldn't you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees, and more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So don't change your strategy, change your platform, and see the difference in your bottom line. That's no commissions, no per contract fees, and it's the only options trading platform where you can earn a rebate on every contract traded. Public.com. This is paid for by Public Investing. Options are not suitable for all investors and carry significant risk. Full disclosures are in the podcast description.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome to Chit Chat Stocks. This is our monthly research episode. I'm one of your hosts, Ryan Henderson, and I am joined, as always, by Brett Schaefer. We are doing, I guess we could call these a deep dive, although I think that term might be used a little too much, but each month, Brett or I tries to dig in to an individual stock, and as you probably know from the title here, today we are talking about the house of brands, the iconic house of brands, Nintendo. And Brett has been a shareholder of this company for kind of in and out for roughly 3 years, but more or less has been following the story for, I believe, a little over 3 years. And we're going to be talking about why he owns it. We've done an episode on this company before, so this will be, we will revisit the overall thesis. So it's not going to be like we're playing off of the old one, but if you want any additional context or to see how we were thinking about the company a couple of years ago, it might have been a year ago now, you can go check that one out as well. But I will pass things to you, Brett. What inspired you to want to revisit Nintendo?
Yes, welcome in, everyone. I should say, as we first start here, what inspired me is the fact that I did purchase some shares of Nintendo in my personal account earlier this year, and then we've seen developments from the management team talking about how a new console is going to be released within a year. If we look at their fiscal year, which ends in March of 2025, it sounds like from the way they're talking that the new console will be launched to the public before that time period. So I think it's an exciting time for the company. I think the new console is going to not necessarily make or break the thesis, but perhaps could be a catalyst. It could prove that our thesis or my thesis on the stock is more right or wrong than we think, and it's going to be a big test for the business. So I want to get into it. I want to talk about what the business does, why I think it has a wide moat, why I think it's cheap, and give an update on a thesis that has been similar as it was back in 2023 when we recorded that episode. But we've had quite a few updates, not only on its console business, but on their entertainment expansion strategy into movies and theme parks. Ryan, a follow-up question here?
Yeah, you've written about this company a number of times, probably, I'd say, around 10 times over the last 3 years or so. When you initially bought the stock, what was your justification? What did you write down?
I can't remember exactly what I wrote down, and my memory can fail me if I don't have it in front of me right now. But if I look at my personal journal from earlier this year, I justified it, which I think was a similar thesis as what it was a few years back. And here's the quote. There's 3 main reasons why I own Nintendo. It's 1, the business has a wide moat and is a high quality business. 2, I can trust the management team to take care of the business properly over the long term. And 3, I believe the stock is cheap based on its forward earnings potential. Nintendo has a wide moat due to its well-loved entertainment IP. Nobody can replicate Mario, Zelda, Pokemon, and these other popular entertainment brands. It does not have a monopoly on family-friendly games, but it is damn near close to it. It has built trust with families over decades that kids can safely play Nintendo games. This trust cannot be replicated by a random company overnight. I think Nintendo stock is cheap if this new console is successful. They likely trade at an earnings yield of 10% plus if the new console maintains or grows the user base. There's also some upside if the entertainment expansion strategy works. Either way, the theme parks, movies are showing to be a moat expander and driving growth in the gaming business. That's the summary of the thesis. That's what I wrote down in my personal journal. And we're going to expand on that, talk about the history of Nintendo, talk about the gaming business, talk about how the new console is a huge test for the business and can confirm or disprove the thesis that I have here, talk about the expansion strategy into movies and theme parks, get an update on that, which we've had some pretty significant updates on that one. And then we're going to talk valuation, balance sheet, management team, how I look at this management team and the quote unquote, as maybe a bull like myself might call a robust balance sheet, but the bears and people that do not like the Japanese capital return strategy, they might call it an inefficient balance sheet. So we might have a debate over that one.
Okay, so let's go through the history to begin with. And this isn't necessarily going to be like all the way back to its very roots, because that was probably 100 years worth of history that aren't that important for the thesis today. But when people think Nintendo, I'm guessing most people think Pokemon, they think Mario, they think maybe the Nintendo Switch or the Wii, and they really think about this cyclical business. You know, people buy the hardware, they buy the games to go with it, and a little bit of a spoiler alert here, the crux of, or an important part of your thesis, is that it's becoming a little less cyclical. So let's go through the actual history. Where does Nintendo stand today relative to its last 20 or 30 years?
Okay, here's a excerpt from the notes on our first podcast. Quote, each console was different in one way or another, and some of them were hits, some of them were flops, but ultimately there was one common trend. None of them stuck, so you'd have these massive shifts in cash flow. When hardware was selling like crazy, there was more eagerness to produce games from both Nintendo themselves and third-party developers, and with more options for games, there was naturally more game sales. This created wonderful operating leverage and profit margins in good times, but difficult periods when consoles evolved. This led to a culture that prioritized conserving cash for a rainy day. I think that is the history that investors need to understand. Obviously, we're not going to do a podcast on the history of Nintendo. If you want to listen to those, there's plenty of those out there. And we had even more, really, on the episode last year. But there's two things people need to understand. One, they've had a lot of hits, and those hits have done quite well. And I mean, they're still in the lexicon today. People know about the Nintendo 64. People know about the Wii. People know about the Switch today. But historically, there have been busts along with these cyclical gains, unlike maybe other gaming businesses or entertainment franchises. And the business model, I guess, or the historical business model, has led the company to want to basically conserve a lot of cash, run up a lot of cash on the balance sheet. It's probably a combination of the Japanese culture as well. But let's get into what the business model is. And essentially, the business model is to first build innovative gaming hardware and then sell the hardware at close to cost of production and then make money. So the way they profit is by selling first-party games exclusively on the hardware. This is unique to Nintendo's business model and really drives a ton of the growth, although we've seen some of the other gaming hardware companies like Xbox and PlayStation get into the games development themselves, but this has been Nintendo's strategy for it really since it began. It has popular gaming franchises that many listeners will know, like Mario, Zelda, and even Splatoon, which is a 10 million unit seller. It has a partial stake in the Pokemon Company, which produces exclusive games for Nintendo systems. Those are some of, if not the most popular, at least a top 3 popular seller on the Nintendo consoles. And then if we look at the history, it's been about it's been a really long 30 plus years in the gaming business for Nintendo. But, we could go through the GameCube, Nintendo 64, the Wii, the Wii U, all that stuff. But the short story investors need to know today is that Nintendo's gaming business model went through a boom and bust cycle for many years. I believe that is priced into the stock right now. And it's almost like the market is expecting that to continue. When they would launch new innovative hardware, at first consumers would love it because it would be a new form factor. For example, the motion sensors with the Wii. That was innovative. People were like, oh, this is exciting. I can play these sporting games or Mario Kart and stuff like that. And then they would think of the hardware as a gimmick. After a couple of years, it would fall out of favor with the system. And since they make most of the money through exclusive game sales, losing hardware players meant a collapse in profits because you lose the active players. They're not buying games, and the games are how you make money. So then, well, all that operating leverage goes to waste. My main thesis is that Nintendo has improved its business model by emphasizing longevity and player durability with its new hardware system called the Nintendo Switch. Earnings durability, to me, means the stock deserves a higher earnings multiple than today, and then growing cash on the balance sheet, which we'll get into later on another section, can be returned at a healthy rate to shareholders and actually I'm pretty confident will be returned to shareholders if this new console is successful, and then new entertainment form factors can help grow the earnings pie. So it's the three things we're going to mainly talk about today: earnings durability on gaming consoles, returning cash to shareholders, and then movies, theme parks, all that good stuff. Ryan, anything else before we dive into the first section?
No, I shared the revenue chart since 2005 there on the screen for anyone who's just listening. Basically, went through a big boom and bust during the Wii period. Kind of was not earning much throughout the early 2010s, and then the Switch was a huge boom as well. And it looks like you'd maybe be entering sort of a bust period where people are using it less and less. But there's a couple things, and Brett's going to get into this, I believe, that are maybe misleading from that. And we'll talk about some of the durability. So let's dive into each part of the thesis. Let's talk about why you think the active users are durable and ultimately the profits are as well.
Yep, and when Ryan says active users, he means active users on the Nintendo Switch. So the Switch was launched in 2017. It combined Nintendo's handheld and console hardware divisions, and that was the main innovation with the product. Now, Nintendo is, I think, always will be someone that wants to have, I wouldn't call them quirky, but maybe really innovative is the way to call it. When they launch something new, they want to have some new innovation that delights their players, and people really like the fact that with the Switch, unlike any other console before it, you could not only play on the TV, but you could immediately pick it up and play on the go as a handheld as well. It was this hybrid console. People loved the flexibility, and it took off like a rocket after the first few years. Now, unlike other prior consoles that saw sales peak after a few years and quickly collapse, Nintendo's hardware and software sales for the Switch have remained strong into year 8 of the system. So previously, it would be after maybe 3 or even 4 years that sales would totally collapse. And now we're almost double of that. So I think that in and of itself has proved that they're much better at keeping players around than they have been historically. So for example, in fiscal year 2020, which ended in March of 2020, so right before the pandemic, barely had a pandemic impact, Nintendo sold 21 million gaming hardware units and 169 million software, which would be basically game units. And remember, software units are important because that's what drives the profits. 21 million, I guess, is historically been what you would think was the peak, because that was a couple years after the system launched. And then I think a lot of investors were predicting that, well, it's been 3 years. If someone wanted to buy a Switch, they would already buy it, and then sales would fall off a cliff. But if we look at fiscal year 2023, 3 years later, Nintendo sold 18 million hardware units and 214 million software units. Remember, software units drive profits. So they had 18 million new hardware units that year. I think that would be year 6. Then if we look at fiscal year 2024, which ended in March of this year, they sold 16 million hardware units and 200 million software units. And its new Zelda game sold over 20 million copies on its own. I might share the screen here, but I'll definitely include it in the newsletter. Their active users have consistently grown since the Switch has launched and did not reach a peak like the old consoles. They're at 128 million as of the end of last quarter. They actually just released it as we're recording this morning. And we've gone from basically 19 million to 38 million to 66 million to 91 million to 108 million to 121 million to 128 million. It's been steady growth. I think that is 6 straight years of growth. And that is a great sign because historically the chart looked like a bell curve and now it looks like a linear grower. And yeah, growth has slowed down. They're not gonna become a billion user business. At least if they do, well, the stock will do incredibly. I would not expect that whatsoever. It's the gaming business. It's not like the smartphone business or something like that. And you can see this on the income statement. Now, Ryan, you have a follow up on that before I get to the profit part?
Yeah, and it's households, right? It's not just, this is a system for probably multiple people at once. It's not like you're selling to every single individual like you would with a smartphone. So yes, the likelihood that there are even a billion households that could afford to play a Switch is probably pretty low. So obviously there's going to be some sort of diminishing growth as they scale up past 100 million.
Yeah, exactly. And I think that they have some smartphone games, which I'm sure have plenty of users, but those aren't really as profitable or not nearly as profitable as the Switch. And I guess maybe to level set expectations for investors, our expectation, or my expectation, I should say, is not necessarily that these active users continue to grow at that impressive rate, but that they really stay stable and are over 100 million once this new console is released. And if they grow, well, that's great because we'll make even more money. Now, if we go to the profits, you can see basically this durability in software sales showing up on the income statement. Profits have been stable from fiscal year 2020 in US dollar terms up to today, and they're up massively in Japanese yen terms. Now, as a note, the yen has depreciated a lot against the dollar, which is a headwind for profits in US dollar terms right now because of how much of its sales come in Japan. So for your US shareholder, which I think most of the people listening to this are, that hurts for you today. I can't predict what the yen is going to do. It's been a rough few years for that. I wouldn't expect it to continue, but if it does, hey, maybe take a vacation to Tokyo or something like that and go visit the Nintendo Museum and the Nintendo theme park. Now, if we look at in the newsletter, I'll have both the charts from here for in the yen and the US dollar. And I would note that the chart looks abnormal or maybe not as linear of a grower due to the pandemic period where there was an abnormal profitable period where software sales went up and a ton of people were buying video games and playing video games at home because of the pandemic. If you exclude that year, I think the profit growth looks much, much better. And then if you exclude the yen depreciating a ton, which we can't predict, it also looks much, much better. So why did this happen? So why are active users high? I think that's the real question because you can look at those numbers and you can say, well, it's good, but was that a fluke? Will it continue? I think there are 4 main reasons why the active users have grown. 1, success of Nintendo Switch Online and the Nintendo account. So previously, Nintendo wasn't really great at retaining users, having these software systems that go along with stuff. People complained about it. The online stuff was terrible, all that good stuff. Nintendo Switch Online is a kind of a software subscription similar to, Xbox Live, or I forget what the PlayStation one is called. You pay a flat fee every year. You get access to a lot of legacy titles, online play, and it has tens of millions of subscribers right now. And then you have Nintendo accounts, which drive everything together across all the Nintendo platforms, or I wouldn't call them all platforms. There's really one gaming hardware platform, but anything Nintendo. And there's, I think, over 300 million active accounts. Second is they reinvested a lot into the flagship games and franchises years into console releases. So that Zelda game invested a ton of money into that, put it out in year 7 of the console, or maybe even year 8, and it sold 20 million units. I mean, that was something that they did not do previously. Third is they updated the hardware with improved form factors, like with the Lite model and the OLED models years into the release to drive maybe new customers or people to get, an upgraded version. And then lastly, this is also important. they embraced more third-party development, which can drive software sales. And obviously, they take a take rate on that, so that drives profits as well. Now, as we'll get into, and Ryan can have the follow-ups on this section before we start this next one, they have announced, as I mentioned earlier, the successor to the Switch. That's their quote, and it's a translation into English from Japanese, so sometimes there might be some stuff lost in translation, but I think that one's pretty clear. There will be a successor to the Switch released sometime this fiscal year, meaning by March 2025.
Yeah, I think that covers the durability well. And it is very important if you're looking at this on an aggregator to toggle between local currency, so Japanese yen for them, although they earn a lot in USD as well, and the US dollar reporting. Because of the strength of the US dollar lately, there is quite a large differential there. So it kind of makes it look like maybe it's more cyclical than it is. Let's talk about the catalyst that you just mentioned. The Switch 2, this is something that has been, I think every year that we've owned Nintendo, we've thought Switch 2 is coming. It's coming. And
It's finally here.
Feels like it keeps getting pushed back, but it's finally here. What are your expectations here, and why do you think this can be a big catalyst?
Okay, so the new console, we'll call it the Switch 2. We don't know what the name is going to be, so that's just a placeholder for this podcast. Is reported to be a similar form factor to the Switch, but with updated capabilities. Now that means better screen, faster processing, stuff like that. And I think the key is from these rumors is that we're not seeing a huge change in the form factor. We're seeing this hybrid mobile and console at-home gameplay, which people loved, and that will make it, I hope, less risky from a business perspective. Because in the past, they've taken a lot of risk on some stuff. You had the Wii U, the Wii, the Nintendo 64, some other stuff. A lot of them were successful, but a lot of them were flops. And maybe not taking as much risk and focusing more on the games and the actual game side of thing, which they have done over the last few years, I think will play well for the Nintendo Switch 2. So compared to our recording last year, we now have a release date. And the year following the new Switch launch is going to be very important because it's going to prove or disprove, finally, that the software sales and the profits are durable like we think. My expectations are as follows. First, I expect it to drive growth in hardware sales as the core Nintendo customer refreshes the console. This year, which would be fiscal year 2025, Nintendo is guiding for 13.5 million hardware unit sales. I expect around 20 million or higher for the next few years after the Switch successor is launched. Second, I expect a surge in software sales. Not only will new hardware be in the hands of players, which, when you buy hardware, you got to buy at least one game, right? But Nintendo will likely launch new software titles. For example, it has been years since an updated Mario Kart has been released. This is Nintendo's most popular and profitable title. This year, Nintendo is guiding for 165 million units of software sales, which I should say for the trough before the new console releases, I think that is pretty darn good. And I expect software sales of 200 million or higher in the years following this new console release. And both these developments should drive that active users chart that we shared earlier that I mentioned, have hit 128 million to steadily grow or at least remain stable. Because the key here is not necessarily, as we mentioned, that this new console doubles active users, but really keeps them stable, keeps them over 100 million. And if all this occurs, I think Nintendo's gaming profits can grow from around 3.5 billion USD over the last 12 months to an average of $5 billion each year for the first 3 years following the new console launch. I think, depending, I guess if the yen collapses versus the US dollar again, that could throw a hiccup into the mix. But I don't think that is crazy to expect having this slight jump where if this is the cyclical trough, which previously the cyclical trough was operating losses, and now it's $3.5 billion in earnings, or maybe a little less for fiscal year 2025. I think having it jump $1 billion, $2 billion is not crazy. Ryan, what do you think about these? Anything you disagree on with my expectations for the Switch? How are you looking at it?
No, I think the biggest thing here, the most important thing to understand for anyone who hasn't kept up with the Nintendo story, is that you are not restarting from square one. There will be a lot of incremental, like added on hardware sales, but there will be a lot of people that are, it's not like you're starting your account all over again. You're a lot of the games that you've played previously, you'll probably be able to port over. It's got the backwards compatibility or the forwards compatibility in this case. The hardware has the backwards compatibility with old games, is what I'm trying to say. And it just makes it like if you're a user, you have a little more inclination to buy the next hardware when you know that a lot of your progress and any old games will be saved as well. So it really is a big jump relative to where they were between the Wii and the Wii U. But no, I think that covers it well. And I think to kind of summarize this a little bit, it's important to look at the hardware sales chart, which I just shared there. And you can see that it looks a bit like a mountain right now. It kind of peaked in 2021 and then has come down since. And that is the number of consoles sold. And then look at that relative to the software units sold, because it gives you the perspective that these users are sticking around. It's not just new users that are buying games, it's old users that continue to buy games as well, because the software units is stable, is maybe the term I would use. It's maybe declining a little bit, but it's relatively stable, especially compared to the number of hardware units being sold. Anyways, I think that covers this kind of second part of the thesis well, unless you have anything to add there.
I would ask you, what do you think about the earnings projections? Because that's what really matters for investors at the end of the day. Anything, does that make sense to you? $5 billion for one of the new console releases?
Yeah, I think it's difficult to, I mean, that seems reasonable, but I think it's kind of difficult to forecast because
Why so?
we don't know what the hardware lift will be.
Yeah, well, okay. Well, saying that hardware lift that I'm predicting is correct, does that make sense?
What was the hardware units again that you mentioned?
20 million a year.
Next few years, 20 million. I don't know. I think that could be optimistic. Just because if we're looking at it relative to the 2021 period, where there was like a huge, there's been a lot of original Switch sales that came before 2020. But if you're looking at it relative to the 2021 period, I think there's going to be a lot of people that are like, okay, I'm content with my existing console, especially if if you can download the new Mario Kart on the existing Switch. I don't know if there'll be that much incentive. A lot of people will want.
You're not going to be able to do that.
You don't think so?
No. You'll be able to play the old one on the new Switch, but the new games, I think they'll stick with the new console. That'd be a pretty dumb business decision, I think, to not do that. And no gaming console company does that.
You can buy like with third-party developers, like, I don't know, let's take Electronic Arts or something like that. If I'm on an Xbox One, I can still buy the newest version of third-party games.
Not necessarily. I mean, the new college football game is only on the new ones, which I forget what one is which, but it can be a console driver. Like, I guess it depends. Sometimes it's on the old ones, sometimes it's on the new ones, but I wouldn't think a flagship,
yeah, maybe not with Mario Kart.
Game. But either way, do you really think 20 million is that tough when this year, in year 8 of the supposed console trough, we're at 13.5 million? You don't think they can add 7.5 million? Or what would that be? 6.5 million units?
Yeah, maybe it sounds a little more reasonable when you think about the trough. Because there are people that buy every version. There's a lot of people that buy every version. The Lite, the OLED, the original. 20 million, I think, is certainly achievable, especially in the first year of launch. The few years after, it's doable. I don't know. I wouldn't bank on it, but either way, it's going to be a lift to sales and earnings.
Yeah, exactly. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on 1,800 stocks. Want to see NVIDIA's data center revenue? FinChat's got it. Like to track Spotify's premium subscribers? They've got that too. And they just added ETFs to the platform as well. The breadth of FinChat's data is truly one of a kind. We use FinChat every day, and I've personally been using the AI Copilot more and more to summarize earnings calls and conference transcripts. To get 15% off any paid plan, go to finchat.io/chitchat. That is finchat.io/chitchat to get 15% off any paid plan today. The link is in the show notes. Earlier in the show, you heard us talk about the investing platform public.com. That's where you can trade options with no commissions or per contract fees, and you get a rebate of up to 18 cents per contract traded. NerdWallet recently gave Public 5 out of 5 stars for options trading. If you want to see why, go to public.com and start getting a rebate of up to 18 cents per contract traded. Paid for by Public Investing's options not suitable for all investors and carry significant risk. Full disclosures in podcast description, U.S. members only.
Let's go through some of the other entertainment segments, because this is something that was, I believe, maybe not a huge part of our original thesis, but definitely something we had discussed on our old show, which is kind of expanding the brands beyond gaming. What has happened here? And like, since we last spoke about it, what are some of the developments that have happened here? And are you more or less optimistic that this can be a meaningful part of the business?
Yeah, so I titled this one Growing Conviction on Other Entertainment Segments. So I think I am more optimistic than I was a year ago. I think we've seen confirmation in some of our ideas were from their actual announcements here. So on last year's podcast, we discussed Nintendo's investments outside of gaming and really to drive the entertainment flywheel with family-friendly franchises. Or you might maybe think of it as a hub and spoke model with gaming at the center. They have a chart that they always like to talk about in their annual presentation where they have the gaming console in the middle, the Nintendo account connecting everything, and then these spokes of mobile apps, merchandise, theme parks, and visual content, which means movies and TV shows, kind of connecting back to the games. So what they're trying to say there, and they are a bit, I'd say, vague sometimes, to put it mildly, is they're using these new entertainment form factors that they're investing in to try to create, as I say here, a virtuous cycle to keep the hardware, software, gaming business, yes, invigorated is the word they use. I don't know if I'd call it invigorated. I always love how the translation to English kind of gets some funny stuff sometimes. But over the last year, we've seen a lot of improvement for the strategy, especially in the movies. I mean, the Super Mario movie launched last year. It is now one of the best-selling animated films ever. I think top 5. And here's how it impacted the other and IP segment. We had basically stable in yen terms, mobile and IP related income. And then right after the movie launched, we've seen it basically double. You can see that chart in FinChat. And you can really guess when the movie was launched. It was in early 2023. And the quarters that have followed, we've seen the licensing revenue and the returns from that they're getting paid as one of the producers coming back to their balance sheet. But that's one movie. And it's really not a profit driver when you have one movie and nothing else, right? But it's just I think just the beginning of a new segment for Nintendo that can drive profits over the coming decade and growing profits. I mean, over the last 12 months, we've seen 2 announcements. First, they announced the production of a Zelda movie, and then they also announced another movie related to the Mario universe. The Mario movie is coming out in early 2026. As this catalog grows, they will not only earn more money at the box office, but they will also earn more licensing revenue to streaming platforms such as Netflix. And then on top of the direct movie revenue, they have shown that a movie can be and can drive franchise sales from existing gaming titles. This would be abnormal, but the I guess only explanation for Mario sales seeing a boost in early to mid 2023 would have to be the movie. So I think they proved that out. If you look at a chart I'll have in the newsletter here, the sell through on some Mario titles grew 1.3x and 1.4x on a couple various ones here after the movie released. And these are games that had been out for 2, 3, 4, 5 years. So really, that's great. And what's also even better is that the incremental sales on existing games are extremely high. So driving those incremental unit sales can be a huge profit driver. I think we can't also forget the Nintendo worlds at Universal theme parks, which aren't really driving much in profits today, but will be slowly built out and fully operational over the next 5 years. And there's 4 of those around the world. So there are no Disney worlds. You're not going to see the 10 billion. I think it's 10 billion, maybe it's 7 billion in operating profits from Disney and their theme parks. You're not going to get that anytime soon, or probably ever. But 5 years from now, I think if you add in the theme parks, the direct movie revenue, the indirect gaming revenue, I think this can drive $1 billion in earnings for Nintendo, perhaps on the optimistic side, because just from one movie, we've seen a sizable jump in this, and we're really in the first inning.
Yeah, I like the theme parks. Obviously, it's not entirely owned by Nintendo, so they're sharing the economics with Universal. But with the movies, it's nice because it builds more brand notoriety, and it creates probably further game sales. They showed we showed that graphic here, kind of shared our screen. It helped the Mario game sales immediately after the movie. But to be totally honest, I thought this would have had a bigger revenue impact than it did, because I think it did 1.2, $1.3 billion at the box office. It has been in the top 10 movies on Netflix for like 5 months, maybe longer. And it didn't even double the mobile and other related income. I would have expected this to be a much bigger boost.
Yeah, well, I think mobile and IP related income, maybe I should pull it up. And maybe we should pull it up in USD terms. Let me see. Hopefully I have it. Yeah, I already have it up on FinChat. So I'm talking through it, but I want to look at that number for maybe some perspective for the listener. So, okay, USD trailing 12 month. Loading. It's before the movie launched. I guess the yen is depreciated, which is always throws a wrench into the mix. We already had 300 to 400 million in USD and revenue from the mobile and IP and other related income. So I think there was already some stuff from the mobile games and the other licensing stuff for like merchandise, and it jumped up to 600 million after the movie. So I think it was a decent boost. But yeah, you're right. Not, they're only a co-producer. They're not the whole producer here. They're not going to have $1 billion in revenue coming from one movie. But I think that's a decent boost. And over time, as we get 10 movies in the catalog over the next decade, hopefully that's part of the thesis, that can grow and be, I think, maybe not $1 billion in earnings, but if you combine the theme parks and the indirect gaming revenue, I think that's possible. But obviously, $1 billion there might be optimistic.
Okay, let's talk about the balance sheet. We've alluded to it, but they've been hurt a little bit by holding money in the yen currency on their balance sheet. Do you want to talk about what's going on here? And just, it is
well, they're allowed to hold stuff, and they're allowed to hold stuff out. I mean, in foreign bank accounts too, but
they're not earning as much interest as they maybe could, or maybe they're not deploying it at as quick of a rate as people would hope.
Yeah, or they have so much cash that investors complain a lot. That's probably the biggest complaint. Is not necessarily that it's in yen, but well, hey, you don't need all this. Give it back to us.
It is a lot of cash. Why don't you go into the numbers?
Yeah, so at the end of last quarter, which just came out this morning, this cash pile, which I include, if you look at their balance sheet, they'll do cash, short-term investments, and then long-term investments. I include all three. I basically add them together, and then I've taken the current yen to USD conversion, and it is $18 billion in USD. This is a huge net cash position. It is 30% of the stock's current market cap of around $60 billion. And as I mentioned, investors wonder why they keep such a high net cash position. Japan's central bank keeps interest rates close to zero, although I will say, if you look at a chart, it's quite hilarious. They just bumped it up to 0.25% from 0.1% for the central bank rate. So, hey, maybe that's improved a slight amount, but nowhere. It's essentially zero, and it's been zero for a long while. So investors look at it and say, well, you're profitable. You generate cash. You've generated cash probably every year since the Switch has launched. Wouldn't you be better equipped to special dividend billions of dollars out to us as investors? And well, yes, they probably would. They probably could do a $10 billion dividend. It'd be fine and still have that robust balance sheet. But on the other hand, I understand where they're coming from philosophically. They want a sturdy balance sheet that can survive a multi-year downturn because they've gone through downturns before. And well, they have it now. Now, investors seem to take this information a lot of the times and then put a huge discount on this management team. However, I think a little bit more positively going forward with this balance sheet strategy for two reasons. One, the company does return cash to shareholders. They pay a healthy dividend and have bought back stock periodically. I mean, the shareholder yield at one point was up over 4%. Today, it's quite low because they're reinvesting a ton into this new console launch, but I expect that to improve once we see the cash coming in after the next console. And second, as I mentioned, if this new console is successful, the cash will start pouring in, and they've already built up this cash pile on the balance sheet that they want to have for the conservative nature and preparing for any sort of multi-year downturn, economic downturn, whatever. They want to be a long-standing company. They've been around for 100 years, and the management team doesn't want to be the ones to screw it up and send it to bankruptcy. But since they already have this $18 billion, they can now start returning cash to shareholders at a much more aggressive rate versus the new cash that comes in. So I think versus the earnings that come in over the next couple of years, they'll be able to dividend that out or put in a buyback.
Yeah, I think what I would like to see if I were a shareholder is maybe not one big special dividend, but either A, share repurchases, or them just increasing the regular dividend, because they certainly have the capacity to do it. And they have, but they can do a lot more. They could pay out a lot more with that regular dividend.
Yeah, I think I agree with you where with this management team, it would be nice if they committed to some sort of, I know people don't like this because for some companies, it forces the management to focus on the dividend and make sure the dividend is sustainable. But if they committed to a sizable dividend increase and said, we're going to pay this out unless earnings fall off a cliff, I would like that a ton. I would applaud that because they have the cash. And given the fact historically they've under maybe paid out the cash they have in the balance sheet back to shareholders, this would be like, okay, we're committed to doing for whatever it is, it's going to be $3 billion a year, $2 billion a year, whatever. I mean, that would be a huge jump and something that says, okay, look, I'm getting $3 billion back every year. They've committed to that. It's not some sort of special dividend thing that I got to hope for or some huge buyback I got to hope for. I know it's coming and it can be more predictable.
Okay, let's talk through the valuation. What does the stock trade at, and what do you think it's worth?
Today, Nintendo has an enterprise value of about $40 billion if I just take the market cap and subtract out the net cash. Now, could be a lot of hidden value in the investment portfolio that today I'm valuing at zero. I think it is something that could be a nice cherry on top, but I'm not exactly sure when or if they would monetize these investments over the next decade. So I'm going to let it sit there. I don't know if that's going to matter. And hey, if it does, well, that's good. I'll be happy. But if we come back to the actual operational businesses, I think the company can grow gaming earnings to about $5 billion once this new console is released, as I mentioned earlier, and then that the movie and theme park earnings can grow to $1 billion. So consolidated, I think $6 billion in annual earnings are doable. $6 billion versus an EV of $40 billion, that's attractive, right? $6 billion in earnings would be a 10% yield on a $60 billion market cap, which is what they have. But if you subtract out to that EV, it's much higher. We're in the teens. And if they can do $6 million in earnings for multiple years, like I think they can, well, versus a $40 billion EV, that is even more attractive. I think they can generate probably their entire EV in cash flow over the next 7 to 10 years, conservatively. And I think they can generate around half over the next 3 to 4. Now, maybe I'll pause before we get into what I think the stock is worth, which is really not too important. It's obviously not a precise science, but anything there not make sense to you, Ryan? What are your thoughts on the valuation work and how you look at valuing Nintendo stock?
All right, new sponsor alert. This episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fun letters, podcasts, and more, they collect and summarize the best stock pitches and bring them to you in a single place. Think of it like a modern value investors club. I genuinely use Yellowbrick every single week here to try and discover new small cap ideas for the weekly Power Hour episodes that we do. And the best part is you get tons of features for free. Try it for yourself. Simply go to joinyellowbrick.com and search a company or ticker that you're interested in. You are bound to find a great report on just about any company. That is joinyellowbrick.com. Now, I think the earnings figure is certainly achievable, and it's worth remembering when they first launched the Switch, I think they probably surpassed everyone's expectations in terms of earnings power. So if it gets any sort of reaction like what they had with the original Switch, I suspect there'll be even more upside to those earnings. It seems reasonable. I mean, the biggest thing here is that they have this big cash pile, right? So market cap is quite off relative to its enterprise value. And I think people just look at that as they can't value it on an enterprise value basis. They have
They
to value
say
it.
it's worth zero. Yeah.
Yeah, the cash isn't
I'd
worth
say that
anything.
$18 billion is going to come back to you over the next 5 years, but I guess people can disagree.
Right. That's for me, if we started to see management be a little more not aggressive, but I don't know. They're profitable. They are profitable at what most people would probably be consider the bust part of the cycle. And they're still sitting on that cash pile. I would like to see them, I guess, be a little more aggressive with the dividend. If you started to see that, then I think you could really start to lean more towards valuing the cash at something. But yeah, I think any way you slice it, the numbers here feel reasonable, and if they do achieve these numbers, it will be seen most likely as cheap.
Yeah, and I'd follow that and say if they start returning more cash to shareholders, I think you're going to miss out on some of the returns. So my thesis is that this is being undervalued, this potential, and you could get a lot of returns if they start doing that. Obviously it's not guaranteed. I still think we make money if they keep up this conservative balance sheet, but at some point, if I'm right here, they're going to have $40 billion in cash from the balance sheet and an EV of, if it doesn't move, or a market cap here if it doesn't move, of $60 billion. So I think at some point, you're coming up with what's the saying, a movable object, unstoppable force.
I
At
think
some
the
point,
hope
something's
would
going to give.
be I think the hope would be that they don't end up with $40 billion in cash on the balance sheet and that it gets returned.
Yeah, exactly. And we have seen, I didn't put this in the notes, but the Japanese government, the central bank, whoever the regulators are, have told businesses and said, look, everyone's being too conservative. We need some of this cash that's kind of just sitting on your balance sheets to get returned back to society. And we've seen a lot of companies do more buybacks, stuff like that. And I hope Nintendo does as well. And I've seen a little bit of progress there. Now, what do I think the stock is worth? Or, sorry, you have something follow up there, Ryan?
Yeah, I was going to say, just from like a governmental standpoint and society in general, it's not very productive for a
Cash to
country
just sit
to
on
have
balance sheets?
cash just
Yeah.
be doing nothing. Like you want
Yep.
those to be employing people or having it returned to people. It doesn't do much to have it just sit.
Exactly. Think about, and I know the shareholders aren't technically all individuals, but, and this is a sidebar, if you dividend out this $10 billion, well, then Japanese people can go consume more things and they'll consume more Nintendo products. It's a self-fulfilling cycle. But I digress. What is the stock worth? I don't have a precise answer. I think generally the US ADR is worth probably $25. That's my thinking. It's not precise. I think that's a range, maybe $20 to $30. And I think it could be pushing $30, $40, $50 if this thesis becomes fully correct, or if it's even better than I think. Today, the ADR, the US ADR, trades at $12, so close to a double. And I think the downside is protected because you have the balance sheet that's already built up as I talked about, a way too big amount, and the fact that they're about to launch this new console and they're still earning about $3 billion a year. And for some of the best entertainment assets in the world, these franchises of Mario, Zelda, Pokemon, Splatoon, whatever, Animal Crossing, all $10 million unit sellers consistently. I think this makes a great risk reward because the downside, again, as I said, seems like we have a margin of safety here. I'm not talking about the stock. Like if there's a cyclical downturn, there could be a, margin collapse. There could be some sort of few year period where the cash flow goes negative if a new console goes down, and the stock could go down, and it will go down then. But for the business durability, the franchise durability, I think there is a margin of safety at these prices.
When would you sell?
Good question. I think I would sell, first off, I would sell Nintendo stock if this new console is a clear flop. I mean, a clear flop means weak hardware sales, weak software sales, declining active users. The thesis would be proved wrong. And there's plenty of other things I can go into take and reinvest. If the console is a flop, I don't think I'm sitting in this company for another 5 years waiting for the next one to show up. I think there's some other ideas I have. I would hope there's other ideas I have that I could put the money into. The second reason is, and some of the never sell people might disagree with me here, but I would sell if it got to a premium valuation. For example, let's say it shoots up to 30 times my $6 billion earnings estimate. That would be probably 3-4x from here. I have concerns they are willing or can grow much from that earnings base. I don't think they want to. I don't think they can either, given that they're in a niche of family-friendly content, and unlike a Disney, they're not making $10 billion a year from theme parks. I don't want a company that's no growth at 30 times earnings. I don't. I think unlike another stock maybe in my portfolio that has a long runway for reinvestment, think of a retailer that has like 100 stores that I think can get to 1,000. I believe selling a stock such as Nintendo at a huge multiple of earnings does not present a big error of omission risk, if that makes sense, Ryan. What are your thoughts there?
I think it makes sense. The difficulty for me is, and I guess this is why I don't own it, maybe. Right now, I think in general, after discussing this with you today, if there is a time to be a Nintendo shareholder or start being a Nintendo shareholder, now feels like a good opportunity, given kind of the opportunity set that's in front of Nintendo. But I worry that in 4 or 5 years, we're in the same boat. They have to reinvent themselves, and we're saying, what a great opportunity in front of them. And even though it's not nearly as cyclical, it is still very tied to the hardware. And if there were a hardware flop, it would potentially be multiple years of difficult earnings, lack of profitability. I don't know. It doesn't feel like it's like permanent users.
Yeah, I understand where you're going for there. I think the chance of a hardware flop is low, though. I think it's quite low given, and maybe we can reiterate this, the fact that they have Nintendo Switch Online, the fact that they have the Nintendo accounts, and the fact that they're going to do, unlike any other console generation, the backwards compatibility stuff and I know we talked about kind of the debate on whether like a new flagship game like Mario Kart would only be for the new console update. Well, a lot of the games and the third-party games can really get developed across all the titles, and you know, there's a lot of the publishers that decide, well, do we want to reinvest in this old form factor or not, or something like that. But when Nintendo basically said prior and historically it said, well, no, we're actually eliminating all these users, and you have to do only this new one. Now they're giving people the option, and they're investing more in these third-party developers. For example, EA, Electronic Arts, they used to be a huge, I don't want to say hater, but Nintendo and EA used to not like each other. And EA would never publish games on Nintendo, and now that's changed. And I think that's an example of the third-party embracement. For the stock today, I think it's, as you mentioned, given the new consoles coming out here, pretty good timing if you want to buy. Now, I understand that it can be risky. It's not for everyone. Obviously, this is not investment advice, but if profits inflect higher after this new console releases, Wall Street could aggressively bid up the stock, as what happened after the Switch launch, and the earnings multiple could go from below market today to above market with earnings growth. So you not only get earnings growth, but you also get multiple expansion. I think that could end up being a multi-bagger in 5 years. I think that really sums it up here. Ryan, maybe to end it, what would cause you to own the stock? What would cause you to buy shares, to invert it from when I would sell?
If there's a time for me to buy it, it'd probably be now. I think I really do like the opportunity set in front of them, and it really feels like earnings will inflect higher. But as we've moved away from managing other people's money, I'm more find myself looking for businesses where I can buy them and just not really ever touch them, where I'm not like that concerned about any given year's results, stuff where it feels like if they pay a dividend today, that dividend is just going to continue to grow. Or if they're buying back stock, they're going to continue to allocate more and more money towards that. With Nintendo, it's more ups and downs. It's something you got to monitor a little more closely. And so I worry that it's just a business model that I don't feel that inclined to own.
Yeah, it's fair. Well, I think the thesis is that the business model is maybe a little better going forward. Yeah, but we'll see. It's not guaranteed to happen either way. We're going to see what is more correct over the next 5 or 10 years. Well, maybe I'll ask you, what price makes sense to you? What market cap? Like 30% discount from here, 40% discount? Because obviously, as we've talked about, you like the franchises, you think they're durable, but as ad nauseum, we've talked about the console cyclicality is always going to be there. What price makes sense to you from a margin of safety?
It makes sense now. It's just I think there's sort of a limit to the upside in terms of earnings power.
Okay, let me start with you here. If they're trading at $18 billion market cap, would you buy?
Yeah.
Okay, 30.
Yeah, probably.
40.
Yeah, probably. But
that's probably your range.
I would buy it now. It's just
okay.
When I think about it relative to some of the other companies that I am considering, it feels like the upside on some of those other ones in terms of earnings power, like, is maybe higher for longer.
Yeah. Lower on the watch list.
Yeah.
Makes sense.
I don't know. I'm not entirely out of it. Might buy some shares. There was some friction to buying shares last time, but I guess you could probably just buy the ADR, and it's, I think, no commission.
ADR is pretty liquid, yeah. Actually, I should say that as a disclosure for any investors. I know that it's a Japanese listed company. They have some ADRs around the world. I know we have over half our audiences in the US, so that's the majority of the listeners. The ADR, which is NTDOY, is going to be the one you're going to want to buy in the US. It is not one of those ADRs that's like super thinly traded. So you're going to be able to buy some shares, and it's at a pretty cheap price.
I think that's going to do it. I think that covers most of the conversation. So I will wrap things up here. Thank you all for tuning in and listening if you made it this far. I do want to remind everyone that Brett and I are not financial advisors. Anything we say or discuss here on Chit Chat Stocks is not formal advice or recommendation. I will be covering potentially 2 stocks for my research report in 2 weeks.
Doubleheader.
Yeah, maybe a double header here. So little tease there. I talked about them last episode in terms of the 2 companies, but either I'm going to pick one or I'm going to do both. The 2 companies are Paycom and Semrush. I think they're both in kind of a unique position right now. But anyways, I'll finish up with this disclosure. Thank you all for tuning in. We will see you next time.